Yo, what's up, gainers? So for today's video, I'm going to discuss to you what is a market structure shift. And by the way, I'm sorry if I haven't uploaded any videos for this past few days since I have an emergency to attend. So let's go ahead and discuss this market structure shift. So first, what is a market structure shift? Okay, so basically a market structure shift refers to a significant and fundamental change in the market structure or characteristic of the foreign exchange. So in short, for example, we have here an uptrend move of the market. So a market structure shift is hap- um let's say it's a shift or change in the direction of the market. For example, here we have here this uptrend. And then as we can see here, we have here this downtrend. So by understanding this market structure shift, we have here first the uptrend, and then we have this shift into downtrend. That is just the simple meaning of this market structure shift. So understanding market structure shifts in the forex market is important for traders and investors. Why? Because these shifts can help us to develop strategies and identify opportunities to enter a trade in the market. Okay, so number two here. So what are the reasons for market structure shifts? So actually there are some reasons for market structure shifts. The first one is we have, I think, technological advancements that includes algorithmic and high frequency trading. So actually, forex market has its own algorithm. Okay, so and then for me, as we also have our global economic events such as financial crisis, currency pegs or depegs that can actually affect our market, that can cause a shift in market flow. Okay, let's go on the third one. What are the effects of market structure shift in forex trading? So actually, a market structure shift has also an effect in in forex trading. I mean, so some of the effects in forex trading is this liquidity, um, market participants, volatility. Actually, volatility is great, or we have a high volatility during this market structure shift happens. So we have impact on price swings and trends, event-driven volatility, and the last is we have effect also on trading strategies. If we are scalping, swing trading, or long-term investing. Okay, so number four, type of market structure shift. So we have, for me, I have two understanding of this type of market structure shift. The first one is the very common market structure shift. So here, let me give you some example. This one. So for example, we have an uptrend. So this is the common market structure shift. Okay. So we have here this higher high. Lower this. We have here this higher. This is our high. For example, this is our initial high. Initial high. Initial high, and this is our initial low. Initial low. So for as we understand here, looking at this structure, we have here this higher low, and we have here this higher high, And again, we have here this higher low there. So looking at this structure, we can say that our market flow is in an uptrend structure. So this is the basic or the most common market structure shift. For example, we have here. So if the market breaks this higher low and create this lower low and create a lower high, so we can determine this as a market structure shift. So this is a market structure shift since we have here this lower low created and a lower high created. So it only shows that there is a shift in market structure in this um, area of the market. So first we have an uptrend and then we have this downtrend or this bearish move. Okay, this is the common market structure shift. So personally, the second one is my favorite since I'm using this in my strategy of trading. This is sometimes called as an internal market structure shift. So this structure is with what we have here. Let's say, for example, we have also this um, uptrend direction. Uptrend. So my what do you call this? This internal market structure shift happens like this one. For example, we have here this one. Uh, this is okay. Let's just put it this way. Remove this. Then let's remove this one. That one. Okay, so this is a higher low, right? So internal market structure is I'm using it for scalping or intraday trading so that we could get our sniper entry. So this one here, for example, this is a bearish move. For example, this happens there. This is an internal market structure shift. This is what I use in my one of my my trading strategy to get a sniper entry. As you can see here that we have this higher low, but our market structure shift happens above this higher low. Okay, so this is my second type of market structure shift, this internal market structure shift. Say internal market structure shift. There. And then for me, I'm just looking here, this breaker block here for my entry. Breaker block or FVGs, imbalances. That's my entry there. So that's the two types I'm looking when I am trading. The common and this internal market structure shift. Okay? Okay guys, so let me show you an example of this common market structure shift. So looking at this structure, first we can see that we are on the bearish move. So as we can see here that we have this structure, lower low, um this high, and then lower low, and then we have this high, lower high, and lower low. And then this lower high was broken and created this new higher high. So we can say that this is a market structure shift. Okay, so that's the uh, simplest or the common type of market structure shift. Okay, let's go and look for another example here. Let's see. Okay, this one is here. Here we can see here that this is um uptrend here, since we are on the shift in market structure shift before, from downtrend to uptrend. So this is my second type of market structure shift here. We can see here this internal market structure shift, just like in my previous diagram, that you can see that this is low, high, low, high, then low, then this high. It did not break this low here, created this kind of structure. So this is this internal market structure shift. This is the internal market structure shift. Okay, guys. So let's go and ahead and look for another number 5. Okay, so number 5. How can we determine a fake market structure shift? So for me, guys, we could not determine this fake market structure shift. However, we can increase the probability that this market structure shift will work on our bias. Okay, so because no matter how good setup you have or what you've seen in the market, we cannot always argue with the market. The market is always right. Okay, so if you've seen a market structure shift, even though it is a good setup, but the market goes the opposite way, we could not argue. We could not argue with the market. Okay, so let me show you how we can determine, or we could say that this market structure shift is has a high probability that will work. Okay, guys. So let's say this Euro USD. So we have here this internal market structure shift. We've seen this internal market structure shift, right? So as an ICT trader, we always enter our trade here at this FVG, or if we found a breaker block around this area, but there is no breaker, just this FVG. So as an ICT trader, we put our entry here. There. So, or we could target this liquidity here, this low here. So this is just an example. So this market structure shift, internal market structure shift, is has a lower probability. Okay, so let's see what will happen to the market. There you go, guys. We have stop out here. Why? So let me show you. Let's go back to 15-minute time frame. There you go. So we can see here, yes, we are in this, since we have here also this market structure shift in this 15-minute time frame. So what we're going to do is that we took our Fibonacci, and then we can look for our premium and discount area. So we can see here that we have here this fair value gap. So this is the reason why we failed this market structure shift here. because it is not yet in this premium area for us to look for sell. And we don't have any zones or point of interest um, to took in this trade. Okay, so this one here, let's go to back to 1 minute time frame. There we go, guys. So as we can see here, we have this market structure shift again, because this is the low, high is low, then high, and then low, then high, and then we have a break in this current low. Okay, so there we have this market structure shift. And we also have here this above 50% and in this fair value gap area. Okay, so as we can see here, guys, there, the market shift downward. This is our entry supposed to be in this fair value gap. So our for me, my strategy, I'm always targeting this 1:3 risk reward ratio. There you go. We have this take profit hit. Okay, so let me show you another example on how we can uh say that no matter how set up we have, we can always or sometimes this market structure shift will not work. As long as we have our risk management, there's no problem with that. So let's look at this example in Euro USD. 15 minutes time frame. We have here this fair value gap, 15 minutes fair value gap. Okay, so the price reacted on this fair value gap. Let's go to 1 minute time frame. Okay, so as we can see here, guys, we have here this market structure shift, right? So as a trader or as a retail trader, we can enter at this area since this is a bearish engulfing. Some traders will put this as their entry, or let's say find a target around this area. 1:3. There. So we get stop out in this area. So the reason that we have stop out is this. We don't have any uh displacement, but sometimes even though we don't have any displacement, this will work. As I said before, that even though we have a good setup, the market will always um move on its own. We cannot argue with that. Okay, so let's look for another example here. There we go, guys. We have here this internal market structure shift. Okay, so what is the reason that this we have a rejection in this area? So let's go back to 15 minutes time frame. Here we can see here we have a supply in this area. Okay, let's go back to 1 minute. We have here this internal market structure shift. There we can enter at this fair value gap. Yeah, risk reward ratio 3. So let's see what will happen. Still not TP. There you go, guys. We have a take profit hit at this supply. The shift happens at the supply zone above. Even though we have a good setup in this fair value gap, still the market took this supply. Okay, so that's all for today's video, guys. So hope you've learned again from me. And don't forget to subscribe and share this video. And hope to see you again on the next video, guys. Okay, goodbye.